How can a country with a GDP less than half of India deliver one of the biggest stock market return in the world? Why did South Korea's market surge when many other markets stayed very normal? When a market delivers around 140% in 1 year, is it real broad growth or just a few giants moving? And the most important question, if you track Korea, which global cycle are you actually tracking? AI, tips, or something else? Let's break it down clearly and simply. South Korea is small in size but massive in global technology, supply chain. When the world talks about AI, semiconductors, memory chip, batteries, and advanced manufacturing, Korea is always at the part of the story. So, tracking Korea is not just tracking one country, it's a way to track the global technology cycle. Here's a quick comparison. India's nominal GDP is roughly $4.5 trillion. South Korea's nominal GDP is roughly $1.9 trillion. Even with a small population, Korea matters disproportionately because it sits at the center of high value technology and important manufacturing. Now, the core point, according to MSCI data, the MSCI Korea index delivered roughly around 140% return for the last 1 year. The question is simple. Why did the returns become so large? I'll give you the clean framework, three drivers, and at the end, three risks. Before we start, one key detail, Korea's index is heavily influenced by a few large companies, especially Samsung Electronics and SK Hynix. So when the top companies moves or when the top organization grows sharply, the overall index can look unusually very strong. Now the three drivers. Number one, AI boom. AI servers and data centers don't only need processors. They also need very large amount of high speed memory. One of the most important category here is HBM, high bandwidth memory. And South Korea is the major player because Samsung and SK Hynix are key suppliers in the global chain. So the simple chain is AI demand increases, memory demand increases, earning expectation improved, stock price rose, and index rose. Simple. Number two, investor confidence improved and the Korea discount reduced. Market returns don't come only from business performance. They also come from valuation and confidence. For a long time, investors talk about a Korea as a discount, meaning despite strong companies, valuations stay lower than many global peers. During 2024 and 25, the narrative around better governance and strong shareholder return became more credible. So the simple meaning is same companies but higher confidence. Investors were willing to pay higher prices for their stock and the market got extra push. Number 3, foreign buying and currency comfort added the most important fuel. When a story became strong, global investors pay attention. More buying creates more demand, and more demand creates more support, higher prices. And if the currency is stable or strengthening, foreign investors feel more confident or more comfortable. So because currency moves don't eat into return as much. The chain is simple, strong narrative, foreign buying increase, demand rose, prices rose. Quick recap, Korea's strong 1 year performance came from three things. One, AI demand boosted Korea's memory and semiconductor leaders. Two, reforms and confidence narratives supported higher valuations. And number three, foreign buying and currency comfort fueled the rally. Now, the three risks you must keep in the mind. Risk one, concentration risk. A large part of Korea's index is linked to a few companies, few large companies. If this top name slows down, the index can fall really very sharply. Number two, cycle risk. Semiconductors and technology are cyclical in nature. If AI spending slows or memory pricing weakens, the engine behind the rally can lose the power. Number three, policy execution. Reform benefits shows up only when implementation is consistent. If reform momentum slows, sentiment can turn negative. Final conclusion. South Korea's market rose sharply because AI led demand directly benefited core tech companies. confidence and reform narrative lifted valuation. And third, the foreign buying reinforced the rally. And because the index is concentrated, strong moves in the biggest companies showed up even more clearly in the index return. Final takeaway. Tracking South Korea is very similar to tracking the global AI and semiconductor cycle. If you follow the market, keep three things in focus: direction of AI demand, performance of top memory and semiconductor leaders, and the progress on the reforms and governance. Thanks for watching. Make sure you subscribe the channel. Thank you.